Hello everyone, my name is Christian. Welcome back to Tekpon. Today our guest is Saif, the founder and CEO at Altruistiq. Hello.
Hi, Christian. How are you?
Fantastic. Very nice to meet you. Please tell us what your company does.
For sure. So Altruistiq is a sustainability data management platform. What that means is that we do three things. One is greenhouse gas inventory management, and we see that as emissions measurement, emissions target setting, abatement and intervention planning, and so on. And that's the greenhouse gas inventory management side. The second thing that we do is product breakdowns at scale, which means that if you think about, let's say, a food company or a consumer goods company, they will typically want to start looking at their emissions data in the context of products and stock keeping units. And so using our software, companies are able to break down all of their products or all of their stock keeping units into these specific component parts from a carbon emissions perspective, and then move towards redesigning those products. The third thing that we do is supply chain engagement. And so for anyone who's active in this space, they'll appreciate that supply chain data and third-party data is usually super important, both for the greenhouse gas inventory management side of what we do, and also for the product breakdown side of what we do. And therefore providing a secure way for suppliers to exchange and share data and insights with their customers is super important. So that's the third piece of what we do.
Okay, thank you for sharing. Thank you for explaining. And what did you say is the biggest problem that you solve in the market?
I think that the biggest problem that we're focused on solving, and there are other problems that you could solve in this space, but the reason that companies come to us is that we're really focused on helping them to actually decarbonize, to actually reduce the emissions of the product that they produce, and to deliver and develop a more impactful, a more positive impact product. And so again, to contrast with a few other challenges, you could have a reporting challenge, you could have a compliance challenge, you could have a stakeholder management challenge, and those are all important things. And to some extent, and to a great extent, even in some cases, Altruistiq will help companies to achieve those. But the piece that we're really focused on, the long-term mission for us and why companies choose us, is we're really focused on helping them actually drive emissions reductions in the context of their products.
Okay, but who is your target audience? What type of companies usually think about a product like yours?
For sure. So our sweet spot used to be, let's say, a food business in the range of $1 to $10 billion of revenue. That was typically the sort of sweet spot of what we focused on. What we're now finding is that as we've sort of built our brand and reputation and capabilities, we're increasingly pushing against both edges of that. And so our largest customer might be around $30 billion revenue. Our smallest might be a couple of $100 million revenue. In terms of the sector, we're quite focused on the agricultural value chain, which means that we do a lot of food and beverage work, but we also work with cosmetics, personal care, apparel. Typically, a lot of stuff that has its roots in agriculture is the area where we focus.
I'd love to hear your favorite customer success story and how you help them.
Yeah, for sure. I mean, I think there are quite a few. One that I quite enjoy talking about is so one of our customers, for example, is Gusto, which for anyone in the UK, they'll recognize it as a sort of a household name in the food space, in the meal delivery kit space. And Gusto is super focused on both data and choice and variety in terms of the offering that they provide to their customers. And so what Gusto uses Altruistiq to do is to generate the emissions footprint across the full estate of their company, but also for each of the products. And Gusto is able to use this data to then also generate a low carbon menu option, for instance.
Oh, wow.
And if you look at that, it hits both of the value propositions for Gusto. One is that it allows customers to have more choice and more variety in what they're able to choose. And that's important because increasingly sustainability is an identity-driven aspect where it's about how the consumer and the individual buying the product sees themselves. And therefore being able to make a sustainable choice reinforces their self-identity and builds more loyalty with the brand. The other aspect, of course, is the focus on data, which is that it gives Gusto internally better visibility on the makeup of those meal kits that they're producing. Yeah. But also it allows them to bring the consumer into that data-driven story and use data as the way to build that relationship. So that's probably my favorite example.
That's awesome. Wow. And how do you price Altruistiq? How does it work?
Yeah, so typically, as a standard SaaS, I would say it can be both very simple and also very complicated.
Mm-hmm.
And for anyone working in SaaS, pricing is a hugely interesting and hugely challenging field for optimization. So we will typically have a base software, let's say license or software subscription fee, and that will range somewhat based on the complexity of the organization and the size and scale of the organization. And so again, we'll work with some companies that have, let's say, just one business unit in one geography and relatively simple, but we'll also work with some companies that are in 70 or 80 different markets with many different facilities. So there's a lot of complexity there. Usually the add-ons then come on top, which is, how many integrations do we need to set up, for instance? How many different facilities are we going to be covering? Are we going to be doing the emissions measurement on its own for the company, but are we also going to be doing the product breakdowns, for example, and also the supply chain engagement? And so those elements will kind of create an overall package price. What we've been quite focused on throughout our journey is to avoid any hidden costs and also to democratize access to sustainability data within the company. And so what we avoid is we avoid any costs that creep up over the course of the contract. And so typically everything is very upfront. And as a result of a needs analysis, you know exactly what you're getting. But also we avoid any user-based pricing or seat-based pricing, because that acts as a limiting factor for engaging a wider set of people within the company on the data. And we believe that it's important to engage people from the data stage onwards.
That's awesome. So you could have priced it higher just to get more revenue, but companies would use it less, as I understand, right?
Exactly. I think that you want to avoid creating barriers to access. And that's ultimately in the interest of the business and in the interest of the mission, but also in our long-term interest as a company as well, because it helps us become more useful and a more value-adding partner to the organization.
I love this mindset. And as you said, there are no hidden costs, but you didn't make the pricing public because it's customizable for each customer.
I mean, I guess just given the range of companies that we work with, it's very hard to have a single price. Because that typically exposes us, for example, to an uncapped liability in some cases. So, just to give a couple of examples, we've historically gotten this wrong a few times. So, for instance, in some of our legacy contracts, let's say we avoided pricing integration separately, for example, and we had a kind of single price point. It worked for all customers. And just to give you a sense, in a small company, we might run maybe 8 integrations. And in another company, we might run 150. And so the difference in cost for us is hugely significant, maybe even a multiplier of 2 or 3 or 4 times. And it becomes quite hard for you to, off the bat, have a single price point that works for everyone. And so it does, in the enterprise space, it does always end up being quite subject to discovery and needs analysis.
Thank you so much for sharing. But what are the most common integrations that you see? You mentioned it quite a few times.
Yeah, I mean, so again, if you think of the type of company that we would work with, they would typically have anywhere from, let's say, 5 to 50 different data sources that we might need to work with. And if you think of, let's say, an activity-based emissions perspective across the company, and if you also start to include the product breakdown elements of what we do, then we're typically ingesting data that is granular, is specific, and is highly sensitive, but is also quite large volume. And effectively, we could almost build a digital twin of most of our customers using the data that we've been provided, which is obviously a huge responsibility on us from a data security perspective, but also means that we're having to tap into all of the different places where that data sits. And so some of that might be very well structured tabular data, like an SAP, for example, or a data lake of some sort that we can kind of pull from. But in many cases, these are going to be PDFs and PNGs and JPEGs and invoices and other stuff sitting outside. And those end up being then separate data sources that we need to find a way to work with.
I understand. Now, I'd love to hear how competitive is your market and how do you differentiate from the rest?
Yeah, it's a really good question. And the answer, I think, is kind of different depending on whether you're looking outside in on the market as an investor or whether you're inside the market as a customer looking out almost. Okay. And so the market is both very competitive and not very competitive. And what I mean by that is if you're looking into the market as an investor, as a VC, for instance, you'll see over 100 different companies in our space, most of which have only come into existence maybe in the last 2 years.
Okay.
And so if you call it 150 companies, I think another way to look at that 150 company list is that around 50 of them don't yet have a product, but have an idea. Maybe 30 of them have a product, but have no customer. Maybe another 30 have a product and a customer, but no repeat revenue. And so in this way, you kind of whittle it down until you get to probably around 20 companies that are actually at this stage viable. Obviously,
Okay.
many of the others may become viable, but at this stage, there may be 20 or so companies that are realistically in play. If you now start looking at the market from the perspective of a customer outwards, what you find is that there's increasing verticalization in our market. And so if you're a food company, you want to work with a partner that understands food, because it's going to be important from the perspective of how the calculation methodologies are set up, what type of data you need, how you're going to process it, what the evolving standards are, what regulation looks like, as well as the network effect around your product in terms of which other companies you're working with. And so for many reasons, we've landed in the space that we've landed, which is this, let's say, this sort of agricultural value chain. And we're very well set up for that in a way that I think makes it, not a super competitive market like you would expect, because we've now evolved so much where a number of the features that I'm describing to you, for example, would make us fairly useless to a mining company.
Okay.
Right? Like they don't need to have this product breakdown across tens of thousands of stock keeping units, for example. If you're a silver mine, you're producing silver, you're not producing, many different things, right?
Yeah.
And at the same time, we're very well suited for our part of the market. And so I think that what we're likely to see is that increasingly in any given vertical, you might have 2 or 3 players that are actually competitive for that vertical. And then you have and that's in the enterprise space. And in the SME space or the smaller company space, you'll have a range of generalists playing. And then it's about ease of use and cost and all those factors, much more than it is about industry knowledge and expertise.
Great answer. Thank you so much. You explained it really, really well. I understand. Now, I'd love to hear when you started the company and why did you decide to solve this particular problem?
Sure. So I've been in the sustainability space for around about 20 years in some shape or form.
Wow.
I grew up in Pakistan. I started a tree planting nonprofit when I was 15. I then became a sort of a civil or political activist, then started a waste management nonprofit with my high school friends. Worked in the public sector in Pakistan for 3 years, also in sustainability, and ultimately joined McKinsey, the consulting firm, where I spent almost a decade as one of the leaders in the firm's sustainability practice. I also got bored of McKinsey halfway through, and so I started a couple of other organizations, including another environmental nonprofit, but also a farming company producing flowers for the cosmetics industry. And so I had sort of 2 parallel streams that brought me to Altruistiq and to the data side of this problem. One was that in the context of my farming business, the companies I was supplying with roses and jasmine for their fragrance products were asking me for emissions data related to the products I was selling. And so they wanted to understand if I'm selling them 100 kilos of roses, let's say a day, for their perfumes, what is the carbon emissions footprint of that 100 kilos? Not just of my farm, but of that 100 kilos specifically. And they then wanted to understand if I'm selling them this 100 kilos for, let's say, $1.50 a kilo, could they pay me $1.55 for a product with a lower emissions footprint, for instance? And maybe that means that they're going to pay me upfront or make a long-term commitment, and I then remove the diesel generators from my farm, for instance, right? Or move towards regenerative agriculture. And so that kind of demonstrated to me that there's appetite and excitement and also money on the table to help solve this problem. My farming business obviously didn't have the data that it could provide for this, but neither did anyone else, frankly. And so it was an interesting white space to really get into. At the same time, my clients at McKinsey, which were large multi-billion-dollar revenue organizations, were building decarbonization plans that involved a substantial outlay of capital. For example, I was working with one of the largest bottle-making companies in the world, and so if you will certainly have bought one of their products every couple of weeks at least. And for them, the decarbonization initiative that was most important was replacing a furnace with a hybrid furnace, replacing a gas-based furnace for the bottlenecking with an electric arc furnace, for instance, that would use renewable power in place of a lot of that gas. Each of those furnaces cost them about £10 million, and they needed to install 60 of them over 10 years or so. And so you're talking about £600 million, round about $1 billion of capital outlay, but the emissions data that they had available was unpredictably inaccurate, which meant that they weren't able to prioritize whether they do a furnace in Rotterdam before the furnace in Manchester and after the furnace in Dublin, for instance. Okay. They could only use the financial aspect, they couldn't use the impact aspect. And so it was the same problem, which is unpredictable, unreliable emissions data. And so that kind of pointed me in the direction of Altruistiq, and ultimately then I left McKinsey 2.5 years ago to really focus on this problem first, full time. And so the way that we think about it is we want to pioneer the movement towards decision-grade emissions data and procurement-grade emissions data so that companies can actually start to deploy capital in pursuit of, again, building better products and more impactful products.
Wow, what a story. Wow, thank you so much for sharing. I truly appreciate it. I have a question, maybe it's a stupid one, but what makes companies want to invest in this? For example, the company that wanted to buy the roses, what was their motivation for buying lower emissions ones? Do they get some tax reduction? What is the motivation behind them? Or the furnaces choosing hybrid ones?
Yeah, again, a good question. I sort of think of the market in three tiers or three categories almost. One is the one that I think about as sustainability leaders or sustainability natives almost. And these are businesses that have tended to evolve in a sustainable way and really target a sustainability-oriented customer. A nice phrasing that I've heard is the lifestyle of health and sustainability demographic. Mm-hmm. And so if you think of good examples of these sorts of businesses, Lush Cosmetics, Tony's Chocolonely, right, Yanni, there are many, many others that are really focused on that segment. And for those businesses, what they're really looking at for is the actual mission. And the mission is important because it creates consistency, it supports the brand, it's also important to the talent, it's important to the consumers. There's a whole holistic picture for why this is important. Yes. And these first companies that were asking my farming business for emissions data really fell into that camp, where it's something that's in the DNA. And so I think that's kind of the first camp, and I see that as a small camp. It's maybe 10 to 20% of the companies that are in the market looking for a solution like ours. Okay. The next camp I think about as maybe the 30 to 40%. And these I see as the sort of sustainability followers or adopters. And so if you think of the first category as the ones that are native to this topic, very much like you have digital natives, you have sustainability natives, the second camp are the ones that are looking to transition or transform the business end to end to meet the new challenges of this new age. And the motivation for them is going to be largely to pursue the same sorts of opportunities that the sustainability natives are pursuing, which is, if you think of that lifestyle of health and sustainability demographic, that's a high value customer. Anecdotally, and based on some of the survey data that we've seen, that customer tends to be more likely to be young, so between the age of, let's say, 20 or 15 and 35. They're more likely to be urban. They're more likely to be women, for example, than men. And they're more likely to be loyal customers as well. Once they've made the choice, they're likely to keep making the same choice again and again. That's a very, very high value customer segment for any business to target, which means that it's attractive for the sustainability adopters. Companies that I think of here are Unilever, Danone. Again, there are many others that are looking to really pivot really a substantial chunk of the business or the full business in this direction. And I think that's now a really exciting space for a company like us to partner with and support. Yes. The third chunk of the market is the ones who are basically following along for compliance reasons. And those ones are basically in a market that has been shaped by the first two categories. The market, the regulators' expectations, the consumers' expectations, the banks' expectations have all been shaped by those first two categories. And the third one are now trying to just get the table stakes, basically, to be able to play the game. So that's a little of how I see this.
Well, didn't know a thing about it, so it's super interesting for me. I really appreciate the transparency. How big is your team right now?
We're around about 60 people. And so I think we've been In some ways, we've grown quite fast. So over 2.5 years to get to 60 people in most markets and most SaaS contexts is reasonably fast. At the same time, our headcount is smaller than most of our peers, and that's because we've tended to focus very heavily on the engineering side and on the product development. And so more or less half of our team are engineers of some form or other, and half of those are data engineers, and that's a big part of what we do and a big part of our focus. We've also been relatively consistent in scaling, and so unlike many other venture-funded startups, we haven't gone through these massive hiring booms and then need to kind of retrench and so on. We've just very consistently tried to expand month on month because we wanted to maintain the integrity of our company culture and our values. And it's very hard to double the size of the team within 3 months, for example, while still managing to keep that integrity. So we've been fairly consistent, and I think we'll probably keep growing at a similar rate for the next 12 months or longer.
Awesome. Have you raised any funding?
Yeah, we've raised substantial funding. So in terms of the information that's in the public space, we've probably raised around $20 million odd to date. The bulk of it was in a venture-funded round last year. We sort of bootstrapped for the first 6 months of our existence. We then had revenue coming in and an angel investment for the next 12 months. And then we sort of signed term sheets with our VCs, around about 12 months ago. But again, relatively late in the cycle. And so that allowed us to really settle in terms of product market fit, culture, focus, values before bringing on venture funding, which acts as a good growth catalyst.
I really like your mindset. What would you say was your biggest challenge since starting the company?
Oh, that's a good question. And although I've been asked this question before, it's always a difficult one to answer. I think that the piece that I find most challenging and also therefore most interesting is setting up scalable systems and processes. And that's maybe an odd answer, but I think we've been lucky in that there's a ready investor landscape for our space. There's a growing market from a customer perspective, and we have a reasonably straightforward time attracting good talent. And obviously talent is always difficult in its own way, but we've been luckier than most, I think. But what I feel is always challenging is how do you set up systems and processes which can be light touch enough to give autonomy, but also rigorous enough to give structure and clarity for decision making. And then you have to sort of reinvent that almost every 6 months, because when we were 10 or 12 people, we were effectively one team. And then when you hit 16 people, you're at that weird place where you're kind of too big for one team, but too small to be a company. And so you also have to go through these stages of reinvention. And so managing that agility, whether it's in things that are very strategic, like planning processes, how do you plan for the next 6 months, 3 months, whether you're using OKRs or some other system, I don't think there's any startup that has landed on that effectively the first time round. And if they have, it's unlikely to have been durable for the next 12 months. So I think there's this constant process of when it comes to things like planning or financial systems or product roadmap decisions or other forms of decision making, how do you set up systems and processes that can be scalable? The way that we tend to think about that, and obviously this can be a longer conversation, is we try and lead with culture and values and principles. And so a good parallel for me is the British common law system, which has managed to last for several hundred years without a written constitution, purely through the benefit of precedent and clarity on direction. And so if we see each decision that we make as a precedent for the next similar decision, and we're clear and transparent across the organization to provide context, but also logic and rationale, that allows us to devolve a lot of decision making autonomously to different people.
Yeah, that's super important. And are you the only founder?
I am, yes.
Wow.
Which is, I think it's interesting because I'm aware that there's a lot of conventional wisdom that says that sole founders have a harder time of it. But in many ways, it also makes things easier. And so I think that for most founders, if they have a very logical, very clear co-founder at the early stages, then I actually think they're very lucky. And I think that's very rare. And I've been an angel investor 18 times over in the last 4 or 5 years. And in many cases, the founding team that started the company is not the team that you have 3 years later, but is also not always the best team. And often that is clear 2 or 3 years down the line. So there's always a bit of sensitivity in that choice, I think.
Yeah, absolutely. I wanted to ask you how you got your first customers.
Yeah. So I think we had the benefit of reasonably good networks to start with. And so I was already speaking with companies that I knew through my McKinsey experience before even registering the business. And so there were a few conversations we were having then. And so if I think of the first four customers that we got our first 4 customers by around about 5 months into our journey. One of those was a company that I'd been speaking with for 8 or 9 months prior, and that I knew because a former colleague of mine had left McKinsey to join that business several years earlier, and so I knew them in that context. A second one happened to be, some sort of a friend from school that I was reconnecting with who happened to have a need for this sort of thing at around the same time. We ended up going through an extensive tender process, regardless, and kind of had to compete heavily to win that. A third one was an investor introduction, and a fourth one was again like a friend of a friend, I think, right? And I think that's usually how it goes. And all of them ended up being fairly difficult in their own way to close. It wasn't like any of these was relatively easy. They were all many conversations and emails and processy steps in between. But the interesting commonality was all of them paid for the product, despite being aware that there was no product and that they were effectively giving us a down payment to build the product, which I think is a good mindset to go in with.
Yeah, it's fantastic. And today, what is the most successful go-to-market strategies for getting new customers?
I think that we believe there's a huge importance in leading with content and leading with thought leadership and leading with community. And I think especially in our space, where the more that you start to focus on 1 or 2 verticals with a lot of commonalities, the more you start to find that everyone is connected to each other, and that what everyone really values is that you're coming with an opinion and a perspective rather than just with a product to sell. And I think it's super important for us to orient around the product that we're bringing to market. But what our customers are also looking for is empathy and an understanding and perspective. And those things usually come when you go deep into a space and get to know people and get to know subject matter.
Okay. I'd love to hear the vision for the future of the company.
Yeah, so I think for us over the next, if I think of the long-term vision for us, it's that we want to help business produce more impactful products and more impactful services. And so the ideal way I'd see that is if you're buying, a bottle of ketchup or a can of a soft drink, for instance, is that purchase net creating a positive impact on the world? Whereas right now, of course, the net impact is mostly negative. And so that transition, that support, that ever-expanding sort of circle of impact, of positive impact, is one that we see carrying us through for many decades to come. Because right now, people are concerned most primarily with emissions impact. But very soon it's going to be water at parity with emissions. It's going to be biodiversity. It's going to be deforestation. And there's an ever-widening circle, again, of things that we as consumers and individuals care about. And each generation tends to care more than the generation previously. We're all actually better people than our parents, if you look at the data. And so I think that kind of long-term vision is where we're heading. In terms of what that translates to for the next, let's say, few years, we're excited about going deeper into our core sectors and spaces. So again, we like food and beverage, we like personal care and cosmetics, we like apparel. These are sectors that we want to go deep into and build real depth in terms of both the product and the technology that we're building and its ability to serve a wider part of the problem and be a more holistic solution for other aspects beyond just the data management, for example. What do you do with the data? How do you collaborate? How do you set up interventions? How do you deploy interventions? How do you secure financing? All of these sorts of aspects will be important in terms of our product strategy and roadmap. And then beyond that, I think we're already seeing a majority of our revenue coming from the US. And so I think that a geographic expansion to be able to better serve our US customers in terms of both customer service and support, but also capitalizing on the opportunity to do more business development in that region is going to be super important for us. So these are a few things that are top of mind for us right now.
Thank you for sharing. What was the region that you started with?
We started with the UK, but I think that right now, probably only around 30 or 25% of our revenue is actually UK revenue. And I would say probably about 50% plus, just over 50% is US, and the balance is kind of probably just a global revenue pool. I think that there are many different plays that can be successful in this market. And so I think people need to pick their battles. And so, for us, for example, we feel that Europe is a busy market right now. And obviously there's the language complexity, there's regional specificities. And so for us, we kind of see the UK and the US as great markets to focus on. And then we'll continue to do some global business as well.
I understand. Now I'd love to hear your best piece of advice for a founder.
I think there's a lot of things that I've learned, at least over this journey. I think the best piece that I can think of is probably to start with the customer problem and work your way backwards to what you're going to do about it. And I think that a lot of founders start with looking for the big idea, and they want the idea to be unique and special. And usually I think that's a bad thing. I think mostly when you have a unique, special idea, it's probably not got product market fit. Whereas if you start with the customer problem, you can very quickly find out if that's a real problem, if it exists, and if it exists, then it's unsolved. And that means that there's an opportunity there for you to solve that problem. And you can maybe go about it firstly in an analog way, manually, and then progressively build in the technology and find what the right applications are for that use case. And I think that's a much lower risk way and a higher success way to go about it. And I think it also leads to happier customers and a better aligned business. So that would be probably my main point of advice.
Fantastic. I love it. That will probably be a short video. I really like how you said it. And now I have one last question. What's your favorite SaaS product that you use and you can share with the audience?
This is a good question, and it's hard to answer, because there are so many amazing SaaS products. The reason why it's difficult is because I have 2 or 3 products that I would think about. And so if I could actually rattle off 2 or 3, would that be okay?
Perfect. Even better.
All right, great. So, we really like Notion. And what we found is that Notion is a great way to share information across the company, to collaborate, to create a system of record, and to generally create alignment. And so that's worked really well for us in that way. And I think it's become, for a remote first company, it's become a really good source. It's become a really good element of infrastructure, really, of how we set up. So that's kind of one that I think about. A second that I think about is Donut, which is an integration that we use in Slack. And it's very simple and it's very easy, but it pairs different people across the company on a weekly rotation. And so every week, 2 people randomly will be connected, and that connection happens across the company. So every week I get an update that around 70 or 80% of the donut matches resulted in a conversation. It's almost like a speed dating element. And again, for a remote first company, that's a really simple, plug-in for Slack that helps us build connectivity and recreate that water cooler aspect of the conversation. So that's been quite serendipitous for us. A third one that I think about is Spill, which is again, and all 3 of these are connected by the element that they're useful for remote first companies. Spill helps us to do a few things. One is you can kind of it's again a plugin into Slack, and we can kind of individuals can request a therapy session from a therapist whenever they need it. And so from a perspective of creating psychological security and well-being across the company, it allows everyone to have that almost lifeline to connect with someone if they need to, for whatever reason, personal or professional. But it also, before we have our check-ins, we have a little sort of an extension into our sort of calendar link where you go through a simple stage of 2 or 3 questions that you answer to give an indication of how you're feeling today. And so that allows us to kind of, everyone can see at a glance, where is the mood, how's the mood been trending, and who's feeling what today. And it's another good way to get a sort of a pulse check of where everyone is emotionally and psychologically, which I think is super important, again, in a remote first company, but frankly in any company.
Thank you so much for sharing. Is there anything else that you want to tell us today's podcast?
No, I'm super excited to have joined. Hope the conversation was useful.
Yes.
And very happy to connect with anyone who's interested in our space, whether to join the team or work with us as a customer, or in any other capacity at all.
Thank you so much for joining. You did great, and thank you for all the explanations. I'm grateful.
Fantastic. My pleasure, Christian. Thank you so much.